All right, for this video, I want to do a quick run through of the Schedule EIC for the Earned Income Credit. And this schedule is filed when you're claiming the Earned Income Credit and you have qualifying children. Now, you can claim the EIC even if you don't have kids. There's different rules, there's different income thresholds. If you claim it without children, that's fine. You still do all the calculations, but you don't have to include the Schedule EIC. The EIC is required when you have qualifying children that you want to use to increase your credit amount, and so the IRS requires this additional information. So we'll go through the EIC. It is part of the full 1040, so we'll cover all the forms and schedules and worksheets that you need to go through. We've also got the publication 596 here, which has a lot of rules, examples, and the earned income credit tax tables so we can figure the credit amount. But before we get into the schedule, let's have a look at just some background on the EIC, some more details on the requirements, and then what the fact pattern will be that we're working with here. So this earned income credit, it's available to U.S. taxpayers that are living in the U.S. and they have earned income. All right, earned income is the key point here. If you don't have any earned income, you're not going to be eligible to claim this credit, even if you owe taxes, right? So if you have a return that has nothing but investment income, even if it's a low dollar amount, it doesn't matter. You need to have some earned income in order to claim the earned income tax credit. Now, generally, this credit is going to benefit the lower to middle income taxpayers and more so the individuals that have children in order to claim, because that'll boost the credit a bit higher. And when we look at the tables later on, you'll see what I mean there, because the income limits phase out pretty quickly. So as your income climbs up above those thresholds, you won't be eligible for it. And you'll also see that as you add qualifying children, the credit amount does increase as well. Now, the amount of the credit is going to depend on a variety of factors. So one, first and foremost, is the earned income. So you're going to have earned income in order to claim this credit. The investment income also plays a part here. So there are adjusted gross income limitations, which are certainly impacted by the amount of investment income you have in your return. But with investment income, also, if you have too much, you're not eligible. So if your investment income is over a certain threshold, you're barred from having the earned income credit. And then lastly, we have the number of qualifying children. So again, you don't need to have qualifying children in order to claim the credit. There are reduced AGI thresholds, but if you do have qualifying children that you can claim as your dependents, that's going to increase your credit amount. So let's look at the rules for 2024, and specifically this list is addressing people that are claiming the credit and have children. There are different rules that apply for those that have no children. So there's basically three sets. There's rules that apply to everybody, and then after going through the list of rules that apply to everybody, you ask yourself, well, am I claiming children? If so, there's some additional elements. If you don't have children, then there's a separate set of rules. All right, and so this is the list for what will apply to our example. We have an individual that's going to have two qualifying children. So the income limits, again, you got to have earned income. Your AGI can't exceed the relevant threshold for the year. So for this year, if you're single filer or head of household and you have two qualifying children, if your AGI is going to be above 55,768, you're not going to get any credit whatsoever. And this is only one of the summaries. There's separate thresholds for if you're filing with one child or three, or if you're married filing jointly, different rules apply. And you can find all of those rules again in the publication 596. So the 596 will have tables which will show you what those AGI thresholds are. All right, the next test is the residency test. So you're going to have to be a U.S. person living in the U.S., and you're going to need a valid SSN. This is also important because for a lot of U.S. citizens living abroad that are filing the 2555 for the foreign earned income exclusion, if you do that, you're not a U.S. resident for this purpose. You're still a U.S. tax resident, but you're not a U.S. resident for the earned income credit, so you're not going to be eligible for this credit. So for all the expats that are watching, you're out of luck. You're not going to be able to claim this. Now, the relationship test, this applies to the child. So what is your relationship to the child? So you can claim someone as a qualifying child if they meet one of these categories. So a son, daughter, stepchild, foster child, or any descendant thereof. So that would include if you're a grandparent and you're filing this, trying to claim the EIC. If you're a grandparent and you have custody over or watch over your grandchild, that would meet the relationship test. Grandchildren count. The age test here, so there's 3 tests under this category. So generally, we're looking at the first one, right? The qualifying child has to be under 19 at the end of the year, and they need to be younger than the taxpayer that's filing the return to claim them. Or the second test is they can be under 24, so over 19 but under 24, and if they're a student. So if they're a full-time student, if they're in college, they'll be eligible as a qualifying person, so you can claim them for the EIC. Or lastly, the age is irrelevant if the individual is permanently disabled. Okay. Now, only one claim is allowed, meaning that if you have parents that are separated and split custody, let's say, only one parent can claim this child as a qualifying child for purposes of the earned income credit. So the qualifying child can't be claimed on 2 separate returns. And then lastly, the residency test. So the child has to have lived in the U.S. with a taxpayer for more than half the year. So if, for example, you've maybe not legally adopted somebody, but you've kind of you support a child that's living overseas. You provide health care, money for school, food, clothes, whatever it might be. You might be supporting that child financially, but unless that individual is living with you in the U.S., it doesn't count. Now, there are special rules for adoptions, but the general rule is exactly that, right? They have to be a resident in the U.S. with you and live with you for more than half the year. All right, so let's look at the fact pattern here. We've got Jane Smith. She's 35, filing as head of household, has 2 sons, ages 9 and 6, and her earned income for the year, so if we were looking at her W-2 Box 1 wages, it was $51,000, and she had a little bit of investment income of $5 of interest. So now let's have a look at her return. We'll look at page 1 to start with, just to get a sense of what her income profile looks like. But we can see here she's claiming her 2 children as dependents. And then her income, there's her wages of $51,000, her investment income, and then her adjusted gross income is $51,005. So once she's got all that information entered, now she can start to work on how much of the EIC amount I'll be able to claim against my taxes. So starting with the Schedule EIC here, we have the earned income credit for qualifying child information. So complete this for every qualifying child that you're going to use in order to calculate the amount of earned income credit. So we've got the child's name, social security number, year of birth, and then question 4A asks, was the child under age 24 at the end of the year, a student and younger than you or your spouse are filing jointly? So notice we're answering all of these, well, we're leaving these blank, and that's because of this little highlighted note up here. If the child's born after 2005 and the child's younger than you can skip those lines, right? So questions 4A and B are only applicable if you would answer yes to that following question. All right, then enter the relationship to you. So in this case, they are her sons, and then enter the number of months the child lived with you in the United States during 2004. So we've got all 12 months the kids lived with her, so the EIC is completed. Now, this schedule, you'll notice there's no financial information on this because this is really just a due diligence checklist for you to complete and for the IRS to review. They want to make sure that you're answering these questions, you have valid social security numbers, and the kids indeed qualify as qualifying children for the federal tax purposes. Now, if we have a look at the actual worksheet to complete the credit, let me scroll on down here. Okay, so the Earned Income Credit Worksheet. Now, as this hyphenated or this sentence in parentheses notes, this is not a actual form that's filed with the tax return. It's available in the form instructions and in that publication 596. You're only using this to calculate the amount of credit that you're going to be eligible for, and then you report the credit amount on the return. You keep this for your records. Don't send it to the IRS. They don't want to see it. So we'll walk through the worksheet and show how we arrive at the calculated amount. So line 1, enter the amount from the 1040, line 1Z, plus any non-taxable combat pay that's elected to be included in your income. So the non-taxable combat pay is excluded from income for soldiers that receive this kind of wages. Now, because it's exempt from income, it's not taxable, and so if they want it to be included, they can file an election or make an election to include it for these purposes. But in this case, it doesn't apply to us. So Jane Smith is just reporting the $51,000 that she has up here on line 1Z. So $51,000 of W-2 wages, none of these items apply, 1B through H. So we have got 1Z of $51,000, and that's entered there. Enter any amount from Schedule 1, line 8S. That's a Medicare waiver payment excluded from income, not applicable to us. So we subtract lines 2 from 1, and we're left with $51,000. Now, line 4, Jane is an employee. She's not self-employed. But if you are self-employed, you would complete Schedule C to report your self-employed earnings and pay taxes on those. Self-employed earnings do constitute earned income, so you can include those in this calculation. For our example, we don't have any self-employed income, so that line item is left blank. Now what we're going to do is look up the amount of income we have here in the EIC table. So look up the amount on line 5 in the EIC table and enter the credit amount here. So we're going to go to the tables in 596 and look up our $51,000 figure. So if I go to the publication 596 and we go down to the EIC tables here, the way these tables works is the income range you're looking at on the left-hand column, and then you move left to right based on your filing status and the number of qualifying children that you have. So we're going to scroll on down until we find our $51,000 figure. Bear with me here. Okay, so if we're looking on the left-hand side here, so there are these columns here and these columns here. So we're looking for 51,000. We find, or within what range your income amount falls. For us, it's right on 51,000. So it's asking if the amount you are looking up from the worksheet is at least this figure, but less than the one on the right. Well, 51,000 is our range right here. Even though you see a 51,000 there, it has to be less. So if you had, what's the math on that? $50,999. That would be within that range. But in our case, we have 51,000 exactly. So we're going to use this line item here. So we've got 51,000 to 51,050. And now we move across left to right depending on our filing status and the number of qualifying children we have. In this case, we're using this column because this is for single, head of household, and qualifying surviving spouse. And then the number of qualifying children we have columns for 0, 1, 2, or 3. Well, we're in number 2 because we have 2 qualifying children. So within this range, 2 qualifying children means that we can claim a $999 EIC amount. So I go back to the worksheet, enter $999 as the initial credit amount. Now we have to do an AGI limitation test. So you calculate the EIC using your earned income, but then remember, you can't get the EIC amount if your AGI is too high. If it's above the thresholds, it's phased out. So the AGI from Form 1040, line 11, if I go up to our AGI, we're looking at line 11 here, $51,005. So I go back to the worksheet, enter $51,005. Line 8 is line 7 less than $10,330 if you do not have a qualified child. Well, that doesn't apply to us because we do have qualifying children, and it's not less. Or is line 7 less than $22,720 if we have at least one qualifying child? And the answer is no, right? So we're going to enter no, and it asks us now to look up the amount on line 7 using the EIC tables again. Well, now the number is $51,005, but if we revisit the table, we're within the same range. So $51,005 is still falling within this range up here. So the same credit amount, $999, applies, and we enter that same credit amount, $999. And then now, finally, the earned income credit. If you checked yes on line 8 above, enter the amount from line 6. If you checked no from line 8 above, enter the smaller of the two numbers. So enter the smaller of line 6 or line 8. In our case, it's the same value, so $999 is our credit amount. So now, if we go back up to the tax return, I'll scroll down to page 2 where we input our credits. So we can see here we've entered the EIC amount on line 27 for $999. Now, what you can also see here is Jane is eligible for the additional child tax credit and the regular child tax credit, wherever that is in the form. There it is. So she is including the Schedule 8812, but I'm not covering that in this video because we're just focusing on the EIC. But this is often the case, right? So she's eligible for the child tax credit. In this case, she got the additional child tax credit as well, and then also the earned income credit. So she was able to reduce her taxes down to 0. She's getting all her withholding tax back plus some additional tax credits for the EIC and the ACTC. So she gets a nice big refund here. So good tax season for her. Got her taxes down to 0 and a lot of money back. So I'm sure she would be quite pleased. All right, so that covers it for this tutorial. Hope that was helpful. I'll put more links below on EIC claims for prior years. Those are, even though don't apply to 2024, the concepts are still relevant. You just have to update the numbers. And then also some additional links to some child tax credit videos also. All right, so thanks so much for watching and sticking with me to the end here. And as always, I look forward to seeing you on the next video.